Hello and welcome to Moving Iron Podcast. This edition of the Moving Iron Podcast is brought to you by these great sponsors. Axon started out of a passion for keeping agriculture moving. Imagine having 100 years of tire and wheel knowledge in your back pocket the next time you sell a piece of ag equipment. To find more or become an Axon dealer, please visit axontire.com. This podcast is also brought to you by Valley Transportation. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 or go to valleytransinc.com for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is also brought to you by Ag Direct. No matter how you buy your ag equipment, from a dealer, auction, or a private party, Ag Direct can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. If you want a free baseball cap, send an email to marketing@axontire.com and they will get one out to you. Just give them your details there and send that email to marketing@axontire.com and they will send that to you in the mail. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. And finally, no matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, Ag Direct can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Chip is from Blue Reef Agri Marketing out of Morton, Illinois, via somewhere in South Florida. And he's nice enough to come on once a week to talk about what's going on. So Chip, how are you doing, bud?
Hey, doing well, Casey. I had to move south, get some 80-degree temperatures. So it's beautiful here. It's not so beautiful back in the Midwest. That's part of what we got going on in prices. There's a little bit of planting activity here the last couple of days. I say a little bit. We can get a lot done in a hurry. So been a lot of people rolling across the whole Midwest. In some cases, east of the Mississippi has not been the most ideal conditions. And then, more rain here today. It's moving into northern Illinois and going to, pack quite a bit of rain in that, it looks like. So it's for the foreseeable future, it's going to be fits and starts. And that's, I think, in the next 3 weeks, that's going to be the biggest key to the corn market. We saw Monday the planting progress I believe it was only 7%, should be 15%. Not a real shock to the market. But if we get 3 weeks down the road and we haven't, kind of caught back up with what normal pace is, I think we got some bigger issues in this market, and maybe pushing past that magical $8.50 area if we were to see that. But let's keep our fingers crossed and hope that there's some better windows here to get more crop on the ground.
Right on. All right, so you've got kind of the tale of two tapes here. You've got this cold, wet start to planting in the corn belt, in the soybean belt, and then you have this ultra dry, never really got the moisture needed in the wheat belt, and so now you kind of got these two diverging forces kind of headed towards each other. Wheat's got a lot of things playing in its factor right now. Obviously, the dry, horrible conditions in there, something like it's the second worst rated crop for this time of the year in history. And then you've got what's going on in the Black Sea as far as getting stuff in and out of Russia and Ukraine and what that looks like as far as grains go. So I guess as you're looking at both of these, there's got to be some pretty big concerns about what's a blow off top type of pricing look like for both of these as we head into some pretty critical times for them.
Yeah, it sure is. And it's a little bit frustrating here from a U.S. perspective. You mentioned one of the poorest rated wheat crops in history. Maybe a little bit of rain potential, it looks like in some areas, but that crop has big problems. And yet on top of that, we just can't seem to get any export traction. I think that's been kind of the hope of the bulls in the wheat market for a couple months now. Especially with the closure of the Black Sea, there's no supplies coming out of there, at least from a Ukrainian standpoint. And I think the hope was that the United States would pick up some better exports, but they just continue to be terrible. And, part of that is obviously we grow wheat in, basically every continent, in the world. India has picked up some of the export capacity. There's still some European wheat around that's floating around. And unfortunately, it just has not translated into a lot of U.S. business. Our exports just really struggle. I mean, they're horrific, single digits, 2, 3, 4, 5 million bushels a week. It's just horrible. So, with all that being said, we're still sitting here, knocking on the door of $11 wheat. So we do have a lot of bullishness factored into prices. It's just with the drought situation and the crop ratings and the Black Sea issue, I think a lot of people thought we'd be even at a higher level, maybe in the teens. And I think that's possible to maybe re-challenge those previous highs. Got to remember, it had a massive amount of bullishness built in there, on those highs a couple months ago, early on in that Russia-Ukraine war. So certainly, I don't think that it's warranted to go a lot lower, but right now we're not competitive. Our exports sales every week show that we're not competitive yet. Doesn't mean we won't be in the future. There's just cheaper sources right now, and that's really hurting us, here in the short run.
Right. Yep. Okay, so let's factor in what we see happening with corn prices right now. I think front month corn in May was something like 820 or something like that when I looked at it earlier, and it was over 750. I don't remember the exact number when I looked at it for December corn. We've had a lot of recession talk. We've heard a lot of different things about that. Despite all of the headwinds in front of the cattle market, even with the herd numbers the way they are, feed prices are high, but we're still seeing some real solid numbers come out of the cattle complex.
Yeah, the cattle complex is, a little bit of a head scratcher. A week and a half ago, we had the market kind of breaking out to the upside. Cash markets were pretty firm for the last 2-3 weeks, and seemed like we were gaining $2-3 a week on the cash side. Last Friday, we got a cattle on feed report, wildly bearish. Both the on feed and the placement numbers were way above the highest estimates, and so that pulled the rug out from under us, at least temporarily. Now, through all that, even in spite of the market, what I think on Monday we were almost $4 lower in a lot of cattle contracts. And feeders got beat up. Yep. The cash market still is holding in and actually traded better this week. So that is a bright spot. But the market is still under the influence of this big cattle on feed number. I think part of it is a little bit skewed because of the wheat situation. I think there's more cattle placed into feedlots that would have been running on wheatgrass. And so I don't know that the numbers necessarily mean that there's that many more cattle in general. They just weren't run on the wheat because of the poor conditions there and placed into feedlots. But still, anyway you cut it, it was bearish. We got numbers to work through. Longer term, though, we're looking at massive cow and breeding stock liquidation over the last going on 2 years now due to the drought that really hasn't fixed itself yet. They have got some relief in the far northern plains, Montana, Wyoming, have had some amount of moisture, certainly not a drought buster, but we got big problems out there. And I think longer term, that's going to tighten up the supplies. We'll work out of these big numbers. Part of what's been driving the big numbers, or on top of the big placement numbers, has been this cow kill, and that's added some extra meat in the front end here that we've been fighting for a while. I think that'll come to an end. I think we'll move through these bigger numbers of on feed. It just may take some time. It's taken longer than what I would have expected. I think it might take several more months to work out of. But if you look 12 to 24 months down the road, I would think there's some good things coming in the cattle market. We are fighting $9 corn. These out in Kansas, Texas Panhandle, those areas. I mean, they're feeding $9 corn, so it's brutal. But so far they're getting through it all right. But eventually we've got to see that market kind of turn higher, especially if corn's going to continue to some new all-time high type thing and challenge $8.50, $9 on the futures. That might be enough to put them 9.5, knock on the door $10, unfortunately, in some areas of the plains for cash corn. So not a great situation, but I think we'll work through it. I see good things ahead longer term for the cattle industry, but certainly not everyone. There's different segments, right? Obviously, the cow calf guy, and if you're out in those far northwest plains areas that have just been brutalized by drought, it's been a rough go and not a good situation.
Yeah. All right, so get out your crystal ball here. We're gonna talk about some what if here's. All right, so if let's just pretend for a second that way this is starting out very similar to the way 2019 started out: wet, cold, delay. We're planting corn in July. I don't know if it's going to be that bad, but let's just say that we get pushed out into mid-June here, where things are kind of getting wrapped up, or we're getting a late start or something like that, and obviously we can crank the acres out when we get rolling. But where corn's at now, and there's nothing on the horizon that shows there's going to be any improvement of the wheat condition, especially with you look at 30-day outlooks for precipitation. There's just nothing out there. So I guess as you're looking at those two things long term, let's just say we go down that path of 2019 again, or something like 2019. Where do you think this market could go, and what do you? I guess how do you think that would affect the entire world market? I guess.
Yeah, it's a scary situation. I hope it doesn't come to that. I think that the market will be looking. I don't have the calendar in front of me, but by the third week, whatever that Monday is, the third week in May, if we're not, approaching 70-75% planted in corn, I think the market's going to get add some additional risk premium, just for the simple fact that the later it gets, the least likely we are to hit a trend line yield. We have, knock on wood, raised good crops planting it late, but every single thing's got to go right. And, just the odds of that happening aren't high. And so, in my mind, it's kind of like that, 22nd through 25th time frame of May. If we're not like, knocking on the door 80% planted, I think the corn market gets really worked up over that, especially if there's an extended forecast of still rainy conditions that's going to hold us out. Where could we go? It's a scary number. I don't know. $9 certainly. I don't know if I'm in the 10 camp yet. Let's just hope it doesn't come to that, because I don't think that's good for anyone, for any segment of the industry or the world. And the last time that happened in 2012, it literally, I'm fully convinced it took us a full 7 to 8 years to get past that. And, and you and I've talked on this podcast before, a big thing longer term I'm concerned about is the higher you go. I mean, the law of economics will eventually take hold here. You'll bring in more production. You'll slowly increase supply. You'll choke demand down because of high prices. And if you get a back-to-back, bumper crop in each hemisphere, like United States big crop, Brazil, Argentina big crop, the backside of that is just going to be brutal, because we'll have increased production, we'll have choked off demand, and we'll be just swimming in supply. And it'll take several years to get that worked through. So you could go to some silly number to the upside. I hope we don't, just for the sake of, the industry in general. No one, it wouldn't be good for end users and livestock feeders, especially. But let's hope we can get avert that and get some crop in the ground the next 2-3 weeks. We're looking at, from a production standpoint, record profitability. We had a good year in general last year, very strong profitability in 21. 22 looks even better potentially. Yes, inputs have gone up dramatically, but there's a lot of profitability out there at these current levels, assuming we can raise some average yields.
Right. All right. So now let's talk about the planning side of it here. So that's, you preach that every time you come on here, have a plan. you're working your plan right now and you're taking a look at all the factors that are going into play here now. I mean, your crop insurance numbers and those kind of things are as high as they've ever been. As you take a look at all these things that are going on, you've got Western Corn Belt is going to struggle to have enough water to really functionally have a crop that's really viable. Let's put it that way. The irrigation, those kind of things, but you still need additional water on top of the irrigation water to make stuff grow. And then you've got, the Northern Corn Belt that's just super cold right now, record, flooding in the Red River and all these different things that are going on. And I guess as you take a look at this and you're talking with your customers, how are you having that conversation about a plan and what does that even look like right now?
Yeah, well, part of the problem with that, Casey, is that a plan is different for everyone. There's no one size fits all plan. It has to be customized for your operation, your risk tolerance. In general, though, where our mindset is, you are far enough above the spring crop insurance prices in corn and beans both that it likely warrants consideration of some puts or put spreads, just to lock this profitability in, because it doesn't have to be, there's so much other stuff going on. It could be news about the war. It could be, worsening relations with China, and they shut the cash register off and close the doors up for a little while and not buy our products anymore. Could be stock market related. We had a GDP estimate out this morning, which was actually showed negative 1.4% growth. The market thought we'd have 1.1% positive growth. It could be a lot of things. And while you can be bullish fundamentally here and say, oh, it's late planning and tight stocks and, no Black Sea, anything could pop up. So, our mindset is right now, probably have some amount sold, cash wise, and that's different for different people as well. And be considering some sort of puts or put spreads, because we're so high above that spring crop insurance guarantee. And when you do that, you're locking a floor in, but you're not selling any additional crops. So you have the top side open on the entire crop, that you raise above and beyond that strategy, right? So if you raise, throwing a number out here, 100,000 bushels of corn, and you have 20,000 sold, and you did 80,000 in puts, the rest of your crop in puts. Yes, they're going to be expensive, but you're still going to be able to lock in massive profitability. If we do have a problem, we go to $10, $11, $12. Yeah, you wasted money on puts, but the cash grain that you are going to sell at those record high levels is only going to increase your net profitability. So those are strategies you kind of have to consider in this environment, almost taking it day by day, watching the forecast. I think Sunday night, Monday is going to be an important, forecast to watch. If it's still wet and cold for a 2-week forecast, we're likely not done going higher. If it's starting to straighten out and we're going to get planters rolling, I think you could see a 60, 80 cent break in corn very easily. It'd probably be healthy longer term if we saw an 80 cent break in corn. It's almost straight up every day, and that's not healthy for any market. So that's part of this too. It's the whole psychological thing. It's easy when it goes up every day, right? It's like, just wait. It's down on Monday, but it'll be 20 higher on Tuesday. And the problem comes when we have that 60 or 80 cent break. It'll be everyone, the mentality will be, did we miss it? Should we have sold some? What do we do now? Are we going to keep going? We're going to go another dollar lower? And that whole psychology of the market will come into play. And that's part of the plan too, is to kind of think 2 or 3 steps ahead and say, well, if I've got some puts in place and that happens, then I have options. I can take profits. I can roll them down. I can at least, at a minimum, sleep better at night, knowing that I've got some stuff locked in. So different strategies for different people. One plan is definitely not, fits all, but it is critically important, because I just guarantee it's coming. We're going to have bigger breaks than in corn than probably what you and I can both imagine. We've already had multiple $2 breaks and rallies in beans in the last 3 or 4 months here. And so it's only going to increase, I think, as you get deeper into the growing season here, as far as the volatility is concerned. Yeah,
it's getting crazy out there. All right, Chip, good stuff as usual. Folks want to reach out to you and get more information about what you're doing at Blue Reef. What's the best way to do that?
Yeah, best way is just call us. Our main office number is 550-7213. That all rolls over to our cell phone. Even I'm sitting here in Florida, I will pick that phone up if you call and you have questions. So we're just a phone call away. You'll get a human being. You will get an automated thing at first, but it will ring, and a human being will pick that phone up. And I know in this day and age, that's a frustrating thing when you dial a number, even to a restaurant, to get a reservation, and you can't get a human being.
Yeah, it's crazy. Absolutely nuts out there. I hate that. It drives me crazy every time that I have to call anybody. I dread doing it just because of that. So
I know it. It's just all this technology is supposed to make it easier. It seems like everything's gotten harder.
Yeah, absolutely. That's a very fair statement. All right, Chip. Well, appreciate you taking the time to be on the podcast, man.
Hey, appreciate you having me on, Casey.
Right on, man. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you find the latest editions of the Moving Iron Podcast, all at Moving Iron LLC. Go to my LinkedIn page. That's a Moving Iron Podcast. And also go to the Moving Iron YouTube channel, and that's Moving Iron Podcast YouTube channel. So check that out. I'm on Snapchat. I don't really understand how to use it, so whatever. If you see me there, great. I did something right. Otherwise, just go to my website, MovingIronLLC.com, and you get all the information about the Moving Iron Summit coming up in Nashville, Tennessee, September 6th, 7th, and 8th. That'll be downtown Nashville there. So check that out. Be interested in talking to people about the equipment business and getting information about what's going to come up. Make sure you check that out. So you want any more information about that, send me an email at MovingIronPodcast at MovingIronPodcast.com, and I will get back to you as soon as I can. So with that, I'm Casey Seymour with Chip Nellinger. Let's go loose, my folks. Out. Tire is going to have more tips, tricks, and client advice throughout the year, and in September at the Moving Iron Summit in Nashville. If you're looking to sign up for the event, please head over to MovingIronLLC.com. We hope to see you there. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 or go to valleytransitinc.com for all of your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy ag equipment from a dealer, auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com.